It is your Wall Street beat. Blackstone is urging the government to resolve tariff uncertainty as quickly as possible. President Jon Gray saying a resolution will lead to better outcomes for the real economy and markets. Blackstone's first quarter results showed muted exits for key businesses due to trade tensions. Shares are higher in the pre-market, 1.7%. We are joined now by Bloomberg's chief Wall Street correspondent, Natarajan. Shri, what were your takeaways from their earnings?
Look, the first most important thing as to why we care about Blackstone is it is the largest alternatives firm. It is the largest commercial property owner, and depending on what criteria you use, also the largest non-bank lender. So if you take all of that into account, what Blackstone has to report in its earnings has a broader read-through across the broader U.S. economy, perhaps even the global economy. The results themselves are a smidge better than what analysts were expecting, and that's why you see the stock up a little bit today, up 1.7%. But the bigger picture remains that since the election, since the post-election high, since the post-election jubilation in the stock markets, Blackstone's off roughly 25% this year, even higher if you go back to late November. And the issues there are clearly pretty much on the horizon. When you rely on the movement in the asset market, on deal making, and realizations in real estate are lower, realizations in private equity are lower, it does present a bit of an uncertain future ahead.
When do we start seeing these private equity companies saying, they have real problems with their portfolio companies, or that they need to restructure debt?
So two sides of the equation in terms of the private equity. From a deal-making perspective, if you're out there looking to find good targets, this is a good time, right? Prices are lower. In fact, Jon Gray did talk about the idea with how much prices have fallen. There is an opportunity to jump in. Blackstone is looking for attractive deal opportunities, perhaps not so much in the physical goods space, but it wants to be active. It has about 177 billion in dry powder, most of that in private equity and real estate. But the flip side of the equation is it also makes it a harder environment for exits. And that's important for private equity. That's been a challenge over the last couple of years. They were really hoping that the post-Trump election, the post-Trump mania in markets would carry through much of this year. That hasn't really happened yet, and with all the tariff chaos, may not happen for a little while longer.
Well, Jon Gray was also continuing this trend that we heard from the banking executives, and that was to comment on trade, maybe not talk about Trump specifically. But do these executives, Jon Gray saying that we need a faster resolution, is this an audience of one that they're speaking to during these earnings?
Audience of one with a lot of respect directed towards that audience, right? The language has certainly been more muted, very neutral. He even talks about the need for governments to move quickly on tariff resolution. Yes, you can call on various governments to take that action, but really this was set off by one man, and they're really trying to tell him this is not good for business, and they would really like this resolved as soon as possible.
Do you hear more and more of the donor class making these arguments? Because I guess that's the most effective way to deliver President Trump a message that, they're going to cut off the funding for the Republican Party.
So yes to the first part. I'm not so sure if that's necessarily the most effective part. Yes to the first part because, yes, the donor class is affected by what's happening in markets. When asset prices go down, they all start to worry. You saw some of the change in language for someone like Bill Ackman when the initial week of post-Liberation Day tariff announcements, right? And you've seen some other prominent players in markets talk about the risks there, and they are typically your GOP mega donors. But is it necessarily the most effective way to get through to Trump? I'm not so sure. He is a billionaire president. He's been talking about doing whatever he's been doing in this first 2 months in office is something he's been talking about in his last 2 years on the campaign trail and pretty much for the last 20, 30 years of his business life. So is it necessarily the most effective way to get him off the ledge, get him not to talk about that and not to focus on that? I don't know. I think he will pay attention to the markets, and the markets continue to go in this sort of tailspin mode. That will get the president's attention more so, much more so than a Ken Griffin or a Bill Ackman.